what are the common points as well as the, I don't know, the main differentiators between born in Europe versus born in US startups? Well, I propose you to find out these answers from our next guest, and I am honored to invite on stage here next to me Max Kelly, Managing Director at Techstars London. Max, please take the stage.
Thanks very much. So the great thing about Techstars is we've got about 700 companies that have gone through, and some of them are in Europe and some are in the US, so we're able to actually compare what Europe looks like versus the US in terms of funding, which has been actually a very interesting little experience to do. A quick kind of word on what Techstars is. So we provide the best ecosystem globally to bring new technologies to market. That's our goal. We've got 4 brand values. The first is founders first, or do what's right for the founders. Second is give first, which is help people. So if you want any help, come find me. Quality over quantity, and then network over hierarchy. And I've been amazed. I've been at Techstars for about, I've been involved for about a year and a half, but I've been running London for about the last 6 months, and it's an amazing group of people. I've been really impressed. There are now 22 programs around the world, partnered with some really amazing brands. I think, you know, Disney's a really great program over in LA. Target is just about to launch. There's a couple of Cedars-Sinai and Mayo Clinic are healthcare ones. Barclays has 4 different ones. So we have about half of our 22 are with corporate partners, and half where we're running basically their innovation process for their organisation, and half are focused on a city. So we've had over 50,000 companies apply, and we have just about 700 that have gone through. So it's about 1.5% acceptance rate, with now 64 programs complete. So that gives us 11 companies per program. With a couple of billion raised, and we'll see 240 companies go through next year. Now, the thing that I'm going to talk about, which I think is quite compelling, and basically at the end of this, I will tell you what you should raise, the amount you should raise, and how long it will take you. That's my goal for you. I'll also tell you where to find out about more information. So that's my goal at the end. The first thing was to go to Crunchbase and look at all of the kind of meaningful VCs in the world and pull out where they have a focus in terms of their location. And it's very interesting. The hubs, obviously, as you would expect, it's kind of West Coast US is the kind of leader in the world. This is where they have offices around the world. And it's the top 100 VC firms in the world. So unsurprisingly, West Coast US is the lead. And then you've got New York kind of in second place. And then across the US generally. Outside the US, actually much smaller concentration of offices. So the kind of hub for Europe tends to be London. I'll show you a bit more about that in a moment. Interestingly, Tel Aviv, and then China and India. So those are the kind of core areas across the world where innovation is occurring. And if you look at the figures by amount invested, that also then the vast majority of VC money is going into the US. This I have to say is an amazing slide. So as of 2011, the quarterly amount that was being invested globally was about 10 billion. And in the last quarter of, or Q2 in 2015, it was 32 billion. So the amount of money that's going into venture at the moment is enormous. The thing that's a little bit concerning is the number of deals is pretty similar, but the amount of money that's going in is much higher. So what you're seeing is much bigger rounds going into private rounds. And obviously then that raises a question as to whether that money is going into wise and sensible investments, or is there just too much money in the system. But you'll see this massive growth. This is information from CB Insights and KPMG. So where does the money go? And this is venture money, so there'll be other angel money that's not listed here. So the money goes into seed and Series A primarily. Interesting, fact is that only 30% of the companies that do a seed round actually can raise a Series A. So even though those blocks are pretty much the same, that's because the amount of money is larger in the Series A, but only a third of those companies in the bottom block will actually go on to raise. So it's pretty brutal. The other thing to say is obviously most companies fail as well. So the funnel gets narrower as you go up, but some of those later stages are huge rounds now in the kind of, rather than the kind of idea of a private IPO has emerged. And where does the cash go? Well, the cash goes, interestingly, this is all VC in the world, cash goes into tech primarily. So the bottom part is internet, the one up from that is mobile, and then there's also software in there as well. So if you look at that, that's just over 2/3, I think almost 3/4 of the money is going into tech. So it kind of in VC land, this is where the money is. What's also now kind of beginning to think about the US versus Europe, if you look at the top 10 European investors for Q2 in 2015, the top 10 in the US and the top 10 in Europe are entirely different. There's not a single one that matches, which I was amazed about. And what that points to is that there is, and the studies that have been done on this, is investment is incredibly local. So if you're raising a round, you will probably raise a round from people who are local to you. So depending on where the location of your business is, then that's probably where you're going to get the cash from. And I think, I can't remember, I have a feeling in the US that the average distance that people will travel in order to invest is something like 220 miles. So it really isn't very far at all. It's bizarre. So now, this now then takes a look at the universe in Europe. And what we've done here, so the guys in Techstars in Berlin have pulled together every single fund that exists in Europe. There are about 200 of all different scales and sizes. These are the micro VCs or seed funds. And this is by count, number of them. So if you look at this, about just over a quarter of them are in London. Next up then is Berlin, and after that it's Paris, and then the kind of combination of the Scandinavian countries. So if you are starting a company and you want to raise, then the likely place that you'll be able to raise is in London, Paris or Berlin. Those, there you're getting on for almost 50%. And if you then look at Series A, that picture kind of intensifies as well. So you're then, just those three cities is pretty much half all money half all funds that exist have offices in those cities. So if you want to be raising a fund, then you want to be talking to people in those cities because that's where the money's at. So then, I'm going to rattle through this. It's like I'll take questions at the end. So Techstars, we've got, as we've done an analysis of just under 400 companies and had a look at the type of funding that people raise. So here, the vast majority of the portfolio is in the US. So the figures are skewed towards the US. So when people are raising post Techstars, and this is a skewed sample, but it's an interesting insight because it's real data. So it's 400 companies that have raised, that have gone through an accelerator. What did they raise? So 46% are raising a convertible note, 33% are raising seed, and 12 are raising Series A. And that doesn't add up to 100, so I don't know what the other 4% are doing. But anyway. But what we see is the split in Europe versus the US in terms of convertible loan notes is very, very different. So if strip out Series A, because Series A are basically companies that have knocked it out of park during the acceleration process and are then in a kind of amazing position and can go jump seed and go straight to Series A. The seed, if we balance seed to convertible note, what you see is about 60%, 65% overall here are convertible notes, and you'll see very clearly why in a minute. In the US, it's basically more. It's more than that. So it's about 65 to 70% in the US. In Europe, it's the other way around. Now, our European sample is somewhat UK focused because that's where textiles has been mostly. And in the UK, there are tremendous tax advantages for equity investing. And that means that equity rounds are much more popular, which is why we see a lot more equity raises in the UK. But I think generally convertible notes are less accepted, less familiar in Europe than they are in the US. So it's a very significant difference. So sort of 65, 35 in the US to convertible notes to Series A, to seed, and then almost the exact flip of that in Europe. The size of the round that people are raising, again, this is on the total 400 sample although obviously skewed towards the US. So convertible loan notes are about 600K, 5 to 600K dollars. This is in Europe and the US, and for a seed round. Interestingly, the European ones are raising a larger seed, but you'll see in a minute it takes much longer to raise that seed. So the rounds are basically $1 million to $1.5 million if you're doing an equity raise, and it's about $500,000 if you're doing a convertible note. And this gives you a view on the time that it takes to do the raise. So this is looking from demo day, count how long it is from that point to when you raise, and it is a surprisingly long period of time. This is a kind of dirty secret that people don't talk about, but it actually takes a long time to raise. So the numbers up here. So we have got convertible note in the US, 66 days. So it takes you 2 months to raise a convertible note in the US. That's why almost 70% of people raise a convertible note in the US, because it's really quick. The reason it's quick is you don't have to decide what the valuation is. You just put a cap in there and you do a discount, and that allows you just to raise around, so it's a much simpler documentation. So versus almost twice the length in Europe to do a convertible note. In the US, the seed takes 118 days, and in Europe 175. So it basically takes 6 months in Europe to raise a seed round. And in the US, it takes about 4 months. So it takes a long time. It takes a long time to pull the round together. This is fully documented, so you'll have got the soft commits, hard commits, and term sheet done through that process. So once you've got your term sheet done, you're on your way, and that will be quicker than this. And then Series A takes even longer. This is going to be slightly skewed data because these guys are coming out of an accelerator and then going and raising Series A. So that can take a period of time, but even so, it's up to a year to raise the round. And this is showing the change of raise over time, so the amount that's being raised. So you kind of hit 2011, and you're basically flattening out at around that 600 to 700 mark for the convertible note. That's what people are raising, and it's kind of static now. That's kind of what the raise is. Now again, these are textiles companies. Only 1% get in, or 1.5% get in, so they're highly selected, and then have gone through an acceleration process. So these are quite curated companies. So not every company will raise at this level. But you can see it gives you a kind of sense of the amount that if you're doing a convertible loan note, this is the amount that you'd be raising. This is probably the most surprising chart of anything in the entire analysis that I've seen, which is the amount of money that's been raised in a seed round over time. And if you look in 2007, it was 400. And if you look today, it's 1.6 million. So in the course of 8 years, you're seeing a quadrupling of the average amount that's raised in a seed round, which is just astonishing. That cannot continue. So that's going to have to level out. But anyway, it's a good time to raise now. So the takeouts, so I'm going to do takeouts on the overall funding market, then takeouts on your round, so what your round will look like, and then some resources. So the takeouts on the funding market as a whole, there are some global hubs, US, UK, Israel. US is by far and away the leader. Then UK, Israel, India, China. That's where the other innovation is occurring. Within Europe, if you're going to be in Europe, then look at London, Berlin, Paris, and Scandinavia. There's a lot more money going into the deals, but the number of deals is a similar size over the last 5 years on a quarterly basis. So what that means is rounds are getting bigger. 2/3 of all investment money goes in the VC land goes into tech, so it's a good place to be from that perspective. Funding is surprisingly local. So if you're raising around, don't expect to get any American US money in at all. Just don't expect that at all. Unless you've got presence in the US, you won't raise in the US. That's almost universally true. It's not completely true, but it's almost universally true. And funding takes 50% longer in Europe than it does in the US on average. So if you are raising a round, this is what your round will look like. You will, well, this is based on the textiles portfolio, so it may not look like this. But anyway, based on the textiles portfolio, this is what rounds are looking like. So a seed round will be about $1.4 million or £1 million ish in the UK. And a convertible note will be somewhere between 5 and 700. Depending on the type and the series that you're raising, it's probably going to be about 6 months to raise. Convertible notes may be a bit shorter. If you're doing Series A, it's probably going to be quite a lot longer. You're probably going to have a portfolio of local investors. And because there's an enormous number now of seed stage or micro VC funds that are out there, there's two types of investors who are going to be in at the seed stage, which is those funds and also angels. So you'll have a portfolio of investors making up your round. And then some useful resources. So if you want to know about, if you're kind of thinking of raising and you want to know where to find out and get familiar with all of this, the market data resources tend to be CB Insights, PitchBook, or Matamark. General market news, my kind of go-to general update is TechCrunch. There's plenty of other ones, but TechCrunch is kind of where I look. There's plenty of VC blogs, but Brad Felt and Fred Wilson's are obviously pretty renowned and very good. If you want a list of all of those European funds, all kind of 200 with when they raised their fund, how much they raised in the fund, what focus that fund has, that's something that's been pulled together by the Berlin Textiles team. I need to get their kind of say-so, but then I think we're just going to circulate to anyone who wants it. So you can have the details of the entire funding universe wherever it is in Europe. If you want to know what, for funding, the terms for your funding, probably the best place to go and look is Passion Capital's website. They've got some great, very clear and simple term sheets on which are kind of founder-friendly and easy to understand. So that's a good place to go and understand the kind of terms that you're going to get in your fundraise. And if you just want general understanding of what all of these terms mean, pretty much all of those questions have now been asked on Quora and answered really well. So you might as well just use that as a resource. And I think in 20 minutes, that's me kind of summed up on what's happening in the funding universe in the US and Europe. So probably what I'll do is I will open it up to a couple of questions and then I'll give you back 5 minutes. So any questions or thoughts or kind of points of view? Yeah.
Hi, Bogdan Sena from Ixia. One question. You said that the number of raises has kind of remained constant, but in the last 8 years... 1, 2, 3, 1, 2, 3. Hey, yeah. Hello. So you said that the number of raises has kind of remained constant, but the raise size has actually blown up in the last couple of years. Why do you think this is happening? Why isn't there more investment in different things?
I do think that a lot of the later stage rounds are much larger now. So if you think the likes of Airbnb and Uber and the kind of raises that are going on at that end of the market, they're huge raises. So even though there's not that many of them, the amount of money is enormous. I think at the bottom end of the market, a lot more money has flowed in. To be honest, I don't know exactly why, but all of the QE, the money's got to go somewhere. So they're looking for different sorts of asset classes. If you look at the kind of asset classes that are out there, you're getting nothing in bonds. So if you put your money in any kind of interest-bearing thing is awful. So people are looking at more kind of esoteric investments, and that can include this kind of venture investing. So I think there's probably more money going in, and then some massively so that's just why the amount's increasing. And then there's much more kind of large later stage deals.
Thanks.
Hello. Obviously, you said that the largest amounts were raised in London. My question is if you have any insight of on how many of the companies that were invested in were London-based versus other countries in the Europe. So, and this is the first question. The second question: if you are a Romanian company, would you consider necessary to go and move somehow to London to be financed there or in Berlin or in another country rather than stay here and get a financing from the other centers?
So clearly you can get financing pretty much anywhere. It's just what the level of challenge is to get that financing and therefore what terms you're going to be able to raise that on. If you want to raise in the US, you have to have presence in the US. Otherwise, you're not going to do that. If you want to raise in Europe, I mean, all these funds are enormously keen to get deal flow, and everyone's looking for quality companies. So if you are quality, then you will raise, and you'll probably raise from people no matter where they are in Europe. And European investors are looking across Europe for sure. It'll definitely be easier if you spend time in London and Berlin and Paris where there is money. If you're trying to do it remotely, it's much, much more difficult. Even though we're kind of so wonderfully technology enabled, the reality is there's nothing that beats, particularly on the fundraising side, actually meeting people, sharing time with them. They're betting in the team, right? They're betting on you individually and as a team. And so they have to meet you and they have to spend time with you. And so ideally you'll find a way of doing that. And if you're remote from them, you'll have to go to them, or if they're coming through, you'll have to make time in their diary.
Well, just a follow-up question on this is, do you think investors would consider the liability if you had an operating team in Romania, for example, but did have a token presence in the US or UK for fundraising purposes?
No, you don't want to do it for fundraising purposes. That doesn't make sense. I think a brilliant structure is to have the engineering talent in places like Romania. We had an Estonian company, two Estonian companies and a Czech company in the most recent batch. The engineering talent is really, really good. So actually creating an engineering team here where actually the quality is really high and the cost base is really low is a great model. And then you have kind of sales, or not necessarily even product development, but growth in whatever country you're developing. But you have basically the back end, the engine here. I think that's a great model, and I think investors love that as well, because it's like, wow, this is unbelievable value that you're creating at very low cost. So it's a good model. That.
Just raise your hands.
Okay.
Okay, if that's all, Max, thank you very much.
Thank you all very much. Thanks for your time.